Hey there, welcome to the channel. Thank you, Jpow. All right, so what happened today? Look at this little market. The day it started up, gapped up, was okay, just sold off the whole day. Wow, it's interesting because I was really stuck with like working today, and I wasn't really watching it, but like, oh my goodness, that's just a big down day. Big, huge outside bar on the SPY, putting putting it at the lows, the nearby lows, the QQQs, breaking through the nearby lows. Dow Jones doing the best of all of them. All right. So what happened today? Look at RK getting put down near the lows. Okay. So what happened today? Oh, here we go. Jpow affirmed the central bank's determination. We're going at cnbc.com here. Federal Reserve Jpow affirmed central bank's determination to bring down inflation and said Thursday that aggressive rate hikes are possible as soon as next month. In my view, it's appropriate that we move a little more quickly to raise interest rates, Powell said as part of the IMF panel. I look at this one. I think there's something to be said for front end loading any accommodation one thinks is appropriate. I would say 50 basis points will be on the table for the May meeting. Holy guacamole. Yeah, he just took a dog poop on the market and everything. Jeesh. So let's just take a look at NerdWallet here, kind of just a sample of the current rates as of 421 today's 30-year fix. Look at that thing. Interest rate 5.13%, APR 5.2. Gee willikers, look at that. Just it's going up. So you can watch my video about how you lost $100,000 in your house, et cetera, et cetera. And you can see how this is interest rates are having an incredible effect. So, okay, Jay Powell just beat the crap out of everything. So let's see what we got here. Okay, so let's see. So now what I want to do is I just want to step back a little bit. Okay, so RK, man, look at that thing heading down to the bottom. Now you wonder if this thing's going to have like put in a top at some point, but well, I'm sorry, not a top, but put in a point like here's okay. So here's how this works. If I look at this thing and I'm just trying to pay attention, it's like, okay, big downtrend is crap. But look, we put in a low here. We're getting down to that low. So we'll see what happens. Big determinant day is probably something like tomorrow. Will it hold here or will it break through and go to new lows? Interesting. Now, if for some reason it was able to recover, you could have potentially a big base with a buy point out around 72.5, that kind of area. So it's kind of interesting because it's gotten the crap kicked out of it. RK, is not the love child of all this of the market lately. SPY, no. Brent, look at so you look at your Brent, same kind of symmetrical triangle we were talking about yesterday in these guys. The Brent, West Texas, intermediate, kind of this either symmetrical or descending type triangle, or maybe even a pennant, depends on how you like to draw your patterns. But all these things, yeah, it's a consolidation. And now it's very interesting because remember the election, Macron's election is coming up. Does he make it through or does he not? If he gets elected, are they going to go and they're going to ban that Russian oil? We shall see. Let's see what happened to the dollar today. Well, not the right one. Yeah, dollar strengthened on that a little bit. Gold, let's see, the gold kind of dump a little. It didn't do much, didn't really change. But look at our rates. Now, okay, this is the close day, so this hasn't been factored in yet. So that's kind of where we're at. Let's just check what happened with wheat today. Wheat kind of edging its way down. Probably consolidation here. I wish and really hope that this wheat is a top and it comes down and it breaks this line here and it goes back down to something reasonable. But I have this really bad feeling that it'll just put in some kind of consolidation before moving higher, because no one's negotiating Ukraine. No one seems to give a crap. I mean, everyone pretends to give a crap, but no one really cares. No one cares, like people that could negotiate something and turn this off, but no one wants to turn it off. So that's where it is. Now look at our rates. Our rates are just pushing into that 2.9, really going to this 3% area here. So it's really it's really being pressed, So very interesting. And then what happened to our IWM today? So yeah, big down 2.2% today. I mean, really kind of, let's go back to the weeklies on this. Is this really a weekly? Yeah, it is a weekly. And I just want this guy here. Yeah, so IWM, couldn't get out of its way. It's way below their SPY. So now I'm just kind of looking at the weekly. So now, that it was actually a really bad day. It really confirmed dropping it below the important moving averages. Tomorrow's Friday. We'll see what happens. Maybe they can run this thing up. IWM, what about Qs? Qs are, yeah, just look at the way it breaks from that moving average. That's just, not good. Not good. So as far as I can tell, from the way I'm looking at things, this is a bear market. And we're kind of just confirming, give it another week or so, we're kind of confirming that we're coming into that bear market. You have these important crossovers going down. You're struggling to get back over important moving averages. SPY is probably going to be strongest out of all of those because it's got a bunch of components like energy in there, which is still doing good due to oil, which will continue to do well. Oil should still continue to do well until it gets so high that it breaks the economy. At the point where it breaks the economy, then oil is going to come off like a freight train. It's just going to go crack. And then you have your consumer staples. So these guys are in the SPY. And so that's kind of why they, maybe the reason that they're kind of holding up. And then your Dow Jones Industrials, so let's see, it's a little more kind of large, like it shouldn't be large cap tech, but there's some large cap tech in there and stuff. And then your SPY, yeah, it's hanging in there, but your Qs are going to be, in the worst shape, really in the worst shape. So I don't know. You can go compare to old, previous market tops. This really looks like we're transitioning into that bear market. And if you look at that, and you watch the talking heads on the TV and they're like, well, we're in a bear market when they, fall this much, 20%, whatever. All this is all nonsense. You're really looking for trying to see where you are in the cycle. And I'm really trying to slow it down by looking at the weekly. And when you look at the weekly and you try to zoom out to get really the big picture here, you can kind of see that it's just starting, So, and it's really interesting too, because why would Jpow say that? Well, because look, Jpow isn't going to bail you out this time. And the Fed has lost all credibility. They bailed out the stock market again and again and again. And this is basically, it looks like Jpow is like, look, we got to get some credibility back. That's my speculation. My speculation is he's like, look, we got to get some credibility back. We get this really high inflation. We got to kill it. And it's kind of interesting because you listen to the bond king guy, Van Meter. I think he's probably right on. He's like, look, they're raising rates into an economy that's already slowing down rapidly. He probably is right. The conditions are right. They're ripe for like entering a recession and a rapid slowdown. So the Fed is just jamming on the brakes at the same time that the economy is already putting on the brakes due to all the things that are going on. So it's a real mess. So in the end, thanks, Jpow.